Hey everyone, today I'm going to be going over how to find levels to trade. This is going to be totally personal on how I find my levels on trading and in the market. Now, this can vary. Everyone has their own specific flavor when it comes to trading in the market, finding their levels. Some people look at the fibs, other people do supply and demand, support and resistance. The crossover between 9 and the 21 EMA, and they don't even have lines. There's a plethora of different ways on how to find levels to get in and out of a trade. I am going to be showing you my personal perspective on this, and hopefully this could be of value to you, or at least some of you. Now, I usually always start out by, when it comes to finding my levels, I chart these levels almost daily. I like charting levels. It is good. I find it somewhat of an exercise to train my eye to catch certain things. I know there's some people that draw their levels on a weekly basis. I do not. I just chart them more on a daily basis, and I might tweak some things here and there throughout the trading day, intraday, but I usually erase the board, and I usually always start clean, fresh, just like as you see my screen right now, every single day. It takes me like maybe 5-10 minutes. It's not a big deal, right, for me. Now, some people might say it's a waste of time, but I actually like drawing these lines. So I usually start off on the weekly time frame. I don't chart absolutely anything on here. The only thing I really do look for is see what has been happening in the past couple of weeks and how it how volume is correlating to the price action in the chart. So for instance, these last 3 weeks right here, it shows that it has been an increase in volume. So there has been very bullish. But this past week, last week, it seems like there was a very bearish wick, but with increase in volume. So there might be a pivotal point here happening currently in this week, because today is Friday. We are closing off. There's still a couple of hours till close, so we don't know if it'll close above or below the previous volume bar. But I just kind of look at this weekly chart, and I kind of analyze and create somewhat of a bias on where are we? Are we still bullish? Are we consolidating? Are we looking to do a pivot towards the downside? And that's been kind of what I do in my weekly. I don't do anything other than observe the price action and volume. Now, I drop down to the daily. In the daily, I do literally the exact same thing I do in the weekly chart. For the daily, I just correlate, what's been happening the past couple of days in correlation to volume. For instance, on Monday here, there was a lot of sellers coming into the market, but there seemed to be this area of support, which I'll show you. It's more prevalent in the 4-hour time frame, and it had a good clear bounce back, and now it's kind of trying to go back up, but it seems to be trying to climb up on low volume. And today we're creating this very bearish wick. Again, the day has not ended, so I'll probably have to look on Monday and see how this candle actually ended up closing. But it does seem like it might pivot downward, or it might be an indecision candle. Still in the midst of creating this candle. Another thing I do note down here is I check out for any gaps. So I will definitely mark out any areas that have not been filled yet. So this is a clearly daily gap. I'll mark it. Obviously, price action right now is around 546, and this is all the way down at 540. So there's quite a bit of a distance, but just for the sake of this example, I'm going to mark it out. So in the daily, again, I look at the correlation between price action, volume, and I jot down or mark out any gaps that might be relevant. Obviously, these might not be relevant. This gap might not be too relevant given it's so far away, but again, given the sake of this example, I'm just going to mark it out. Now then I go down to the 4-hour time frame. this is where things for me get the most interesting. The 4 hour and the 1 hour is where I find the most amount of levels. And so I just zoom into, again, what's been happening in the past couple of weeks. As you might have seen, I zoomed into this this corner on the right hand side. I mark out the all-time high right there. And here is the level I was mentioning back in the daily time frame, where there was a clear resistance back here, which broke out, and then it came back down and it tested it again. This was the bearish close, but the next day it kind of kept, it stayed alive, but it was because there was a clear resistance that broke, and then it turned into support. So this was why that level was very interesting and prevalent, and it's more, you could see it better in the 4 hour time frame. So I'll mark that out. I see things, or I look for things that are absolutely just, this is clearly a level. Like this here is clearly a level, something of interest. I want to know about it. And then I start jotting down some areas of liquidity. Obviously, this is past tense. It's been swept a couple of times, so this isn't something that I would keep on my chart, but it is what I would consider a liquidity. It actually hit it yesterday. But I'll go ahead and remove this. For going on forward, this will be my area of liquidity. And, I'll look for areas of retracement. This red candle right here on the 4 hour is an area of retracement, which we just hit, and it seems like we bounced off of today. Again, today is still in play, so I don't know if this level will be prevalent later on, or if it'll be broken off or broken through. So we'll see what happens there. But I'll mark out areas of retracement. So this is a 4 hour retracement in my mind, in areas of liquidity, as well as the all-time high, and any areas that seem to be extremely, okay, this is very interesting area to take note of. It's been bounced around or touched a lot of times. So then I go back down to the 1 hour. The 1 hour, same thing as the 4 hour. I'm just looking for areas that are very interesting, that have happened or are occurring in most recent times. So this level here seems to be a good area. It seemed to be, it bounced once, tested it during pre-market, again during market hours. It tested it yesterday, and it seems to be testing it again today. It ended up closing above here on the 1 hour. So maybe this would be relevant as a resistance that turned support. As you can see, it was resistance, and now it came back down, and it's testing it to see if it will turn support. But the day is still in play. Let's see what actually ends up coming out of that. And then now, let me see, what else do I see? I see somewhat of a double bottom here. This is in areas of liquidity that I would probably jot down, because it's, these are prices that are very close. So this here seems to be a very close double bottom. So I'll mark that out, because there's probably a lot of trapped liquidity here. And I think that's it. I don't see anything else that seems to be screaming at me. And maybe for today, I'll jot this down, because it seems like this could be somewhat of an order block. There was a significant drop in the 1 hour, and then it just continued down. So this whole candle here, I just do the body. This whole candle could be considered an order block in my eyes for a potential, trapped orders up here. I'll have to extend it a little bit further. Okay. So that's what I would see in the 1 hour. All right. And then going on to the 30 minutes. Again, I'm just looking for what's happening maybe in the last 3 days. Any retracements, any areas of liquidity. This seems like an area of liquidity. It's been touched a few times, and it's continuously bounced. So There's a lot of still trapped liquidity, but I might even make this how it's been grabbed a few times. I'll change this style to like a dash so that I know that it's been grabbed a few times. So I don't think it's fresh. Like this liquidity is fresh. Like it has not been touched just yet. It was literally created today. So that's something to note of. If it's an area that has been grabbed a few times, I wouldn't really consider it too strong. This is another area. There might be sellers strapped up there. They weren't able to grab the move. So, I'll consider it. And then I'll go down to the 15-minute. It's been choppy. So when it's consolidating this much, it's really hard to find clear levels. It's better when there's like somewhat of a trend. So I'll go down to the 15-minute, and this is as far as I'll go. The 15-minute, and at this point, I'm being very granular. Extremely, extremely granular. Like I don't even see anything as of right now. Maybe this would be a zone of liquidity, but I mean, there's just so many lines already in this area. I wouldn't consider it, and it's still in play. Like it's still today. I don't see anything from yesterday. Let me see. No, I don't. There's just been so much consolidation, and it just wouldn't be too strong as a signal. So there's sometimes like this one. This would be a very strong signal if we were to come back down here. It seems like there's liquidity here, so I'd like that for a 15-minute grab, but I think this is the one that I was supposed to turn to a dash. I don't know why I didn't save, because it's been touched a few times. All right. But that's it. So going on to, next week, this is still in play. So either we bounce here and we continue up, maybe retest this, order block I have here, or we keep going down, and I would honestly bet that it would go down to this major support that we were able to find on the 4 hour, right down here, this 4 hour. Yeah, I'd say that if we would try to retest that major area of support if we were to break, but let's see what actually happens, right? But that's a little bit about how I do my charts and find my levels every day. If it's the day of, and let's look at the 5 minute. If it's the day of, I'm here, and obviously price action trails down to these levels, I'm gonna be watching for a second confirmation. I'm not going to be just taking it just because, right? For instance, a second confirmation would be, in my case, right here. Okay, it trails down. It just rams through this one level. So to me, this level is irrelevant. I would erase it because I don't want it to mess up with my setups. But this candle's interesting because not only did it cross over an area that I had marked of interest from, a higher time frame, but it also showed and displayed a volume spike, and it closed with a very bullish wick. So I would have probably grabbed calls right here and set my stop loss at this wick's the end of this wick, and then I would have probably banked, what is that, close to $1 right now, aiming for a price target of break of structure here, like this peak. It kind of hit it here, which was perfect, but that this would have been perfect, and then done. And it's a good little, maybe I don't know, it depends on the contracts you get, theta and everything, options, etc. But that's how I would use my levels. My levels is like, okay, I won't watch anything until it gets close to this level. Once it gets close to this, or the levels that were here, then I'm like, okay, is it going to be respected? The level that was previously here was disrespected like instantly. So I would eliminate that because obviously it's not a level that it is being respected anymore. But this one, it seemed to be respected. There hasn't been a candle that has yet closed below it, and there was a really good reaction off of it. So it seems like this is a level that is being respected. So I would probably consider that as a high probability trade to get in on calls and write it up to maybe the last previous high. So this was the last previous high. I would just boop, all right, grab and set my first price target to be up here. And if it turns around and takes out the previous low, which would be this one, on this candle, I would have just gotten out. So that's kind of like how I would have traded. But that's a little bit about how I find my levels, how I trade my levels, and hopefully this is of help. And you know, I honestly just, aside from the lines I draw, I just throw a VWAP on my charts. I usually have the contract here for the options I'm trading, and then I'm watching, you know, I have a VWAP thrown on there, and maybe this indicator that shows me pre-market high and low. But sometimes it's helpful and sometimes it's not, so it just depends on the day. Like, for instance, today would have not been helpful. It came in, tested pre-market, it bounced back up, but there's like a fair value gap here on the 3-minute, and the fair value gap was being respected in comparison to the pre-market low. So you know, it's a mixed feelings. I have mixed feelings about the pre-market high and low. So I throw it in there, but sometimes it's not of best use or benefit for me. But yeah, other than that, that's how I find my levels. I hope this is of help for y'all. And yeah, I guess I'll catch you on the next one.